Hello, we are still in chapter 24, managerial accounting. We're going to talk about the responsibility center. In this video, we're going to talk about the profit center. So, responsibility center means it's a functional entity within a business that has its own goals and objectives. It's used to give managers specific responsibility for revenues generated, expenses incurred, and or funds invested. Okay, so today we're gonna talk about profit center. So the manager's responsibility is to produce profits through generating revenues and controlling costs. So my report will be a comparison between actual revenues and costs and budgeted revenues and costs. So we have this question. One subunit of field sports company had the following financial results last month. We have subunit X, sales, variable expenses, contribution margin, traceable fixed expenses, divisional segment margin. So sales less variable expenses equals contribution margin, less fixed expenses equals divisional segment margin. Since we have revenues and costs at the same time, so this subunit is a profit center. So for requirement number 2, he's asking what type of responsibility center is this subunit. My answer will be it's a profit center because we have revenues and we have costs at the same time. Requirement number 1, he's asking to complete the performance evaluation report for this subunit. So first we need to find the variance, which is the difference between actual results and the flexible budget. Okay, let's do the calculation. So I found the difference between the actual and the budgeted amounts. Now let's see if it's favorable or unfavorable. Okay, now for revenues and contribution margin and divisional segment margin, okay, for these three, if the budgeted amount was lower than the actual, it means it's favorable. Because, for example, if I expected to get $2,000 but I got $3,000, so the difference of $1,000 is a favorable variance. While if I expected to get $3,000 but I got only $2,000, so it's gonna be unfavorable. While for the expenses like variable expenses and fixed expenses, if I expected to pay $3,000 but I paid $4,000, it's gonna be unfavorable variance. And if I expected to pay $5,000 but I paid $3,000, so it's gonna be a favorable variance. So pause the video and decide if it's favorable or unfavorable variance for each item. So now for sales, I expected to get $450 but I got $474. I got more, so it's gonna be favorable variance. For variable expenses, I expected to pay $252 but I paid $261. I paid more, so it's gonna be unfavorable variance. For contribution margin, I expected to get $198. I got $213. I got more, so it's a favorable variance. For fixed expenses, I expected to pay $26. I paid $37. I paid more, so it's gonna be unfavorable. For divisional segment margin, I expected to get 172, I got 176, I got more. So it's gonna be favorable variance. Now to get the percent variance, I need to divide the variance by the budgeted amount. So for the first one, I'm gonna divide 24,000 by 450,000, and I'm gonna do the same for each item. So 24,000 divided by 450, then multiply it with 100 because it's a percent. So your answer is 5.333. He said I need to round it to 2 decimal places. So I need to look at the third one. Is it 5 or greater than 5? No. So my answer will be 5.33%. And it's going to be also favorable as the variance. Let's do the same thing for variable expenses. 9,000 divided by 252, then multiply the answer with 100. The answer will be 3.571. So I need to look at the third number. It's 1, so it's not greater than 5, so I'm gonna keep it as 3.57%. Now for contribution margin, I'm gonna divide 15,000 by 198. Then I need to multiply my answer with 100, so it's gonna be 7.575. So I need to round it to 2 decimal places, so I'm gonna look at the third number. Is it 5 or greater than 5? Yes. So my answer will be 7.58%, and it's also favorable. Now for the fixed expenses, I need to divide 11,000 by 26. Then I need to multiply my answer with 100. It's 42.307. I need to round it to 2 decimal places, so I'm gonna look at the third number. Is it 5 or greater than 5? Yes. So I need to add 1 to the 0, so it's gonna be 42.31%, and it is unfavorable. Last one. Segment margin, I'm gonna divide 4,000 by 172. Then I need to multiply my answer with 100 to get the percentage. So the answer is 2.325. I need to round it to 2 decimal places, so I need to look at the third number. Is it 5 or greater than 5? Yes, so I need to add 1 to the 2, so the answer is 2.33%, and it's also favorable. Now we are done with requirement 1 and 2. Let's read requirement number 3. Which items should be investigated if part of management's decision criteria is to investigate all variances equal to or exceeding 4,000, and for the percent variance exceeding 10%. Now the most important part in this statement is this and. Okay? Now if the variance should equal or exceed 4,000, if you look at the flexible budget variance column, okay? If we look at this column, all of these variances equal to or exceeding 4,000. But for the percent variance column, only fixed expenses item exceeds 10%. It's 42%. So the only item that meets this criteria is fixed expenses. So the answer is traceable fixed expenses. Thank you for watching. If you have any question, please leave a comment. Please like, share and subscribe.